The following program is paid for by EG Tax. All opinions or statements expressed on this program are solely those of EG Tax or its guests and do not reflect the opinions of News Radio 930 WBEN or Odyssey.
The following is paid programming.
It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey everybody, this is the Tax Lady, and this is our time to talk taxes and money and getting ready for next year. We're kind of creating the 2024 tax return right now as we go forward. So we want to make sure that we keep you abreast of everything. And of course, I'm joined in studio with Tiffany Fabian. Hey, Tiff.
Hey, happy Saturday to you.
Happy Saturday to you and Christopher Fabian.
Hello, Esther.
Hello, Christopher. So what are you guys doing for Memorial Day?
I would like to go buy a bike.
Oh,
yeah.
That's good.
Yes, but Chris is fighting with me about buying a bike. So, or in a disagreement with me about it. So,
Oh, why wouldn't you want her to get a bike, Chris?
Because we have 3 hanging in our garage.
they're
Oh, that's
older.
a good reason.
But they're
That's
older.
a good reason,
And-
Tiff.
Yes.
Right? Anyway, we do pray that you guys have a wonderful Memorial Day. We are so thankful for the people who have served our country and have given the ultimate sacrifice. And it's wonderful when you have an opportunity to come together with your family and be thankful for that too.
Correct.
Right?
Absolutely.
Okay, I'm Esther Gulius, the tax lady from EG
So what are
Tax.
you doing this weekend?
What am I doing? I'm going to go to a Silver Springs in Florida. I'm going to Weeki Wachee.
Oh, yeah.
When I was a kid, I wanted to be a mermaid. So, I mean, more like a manatee, but a mermaid. And so I'm going to go with a friend, and we're going to go to Weeki Wachee, and we're going to go see the mermaids.
That's cool.
So that ought to be fun.
Yes. Yeah. And then
Right?
you're going to see beautiful blue water. You're going to see manatees, right?
The water is all fresh water, which
Oh,
is
my God.
unusual because Florida's surrounded by salt water.
Right,
So,
right.
Anyway, I'm Esther Gulius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930. And we kind of are, everybody is having a hard time making ends meet. And I thought it would be a good subject to bring up this time. Like, what can you do to increase your ability to have income and not have to pay taxes on it? So that's kind of what our theme is today. But of course, anything that you think might be something that you'd like to give us a call and ask a question, 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930, and we want to talk about what you can do to get inflation under control in your own personal finances. And we're thinking about doing a seminar to this end, aren't we?
Yeah, absolutely. I just, I was thinking Mr. Ramsey has some courses on financial success and setting yourself up for financial success. And, that really relieves the stress in people's lives when their finances are in order. So,
Oh my gosh, one of the major things that people have fights about as married couples is where did the money go?
getting a new bike, right? Or not getting a new
Or
bike.
getting a new bike because you have 3 bikes in the garage. And so the whole thing is you want to be able to get more income and not have to pay taxes on it, and you want to have less expenses. So that's kind of what we're going to talk about is how to get some tax-free income and where it comes from, right?
And then also, doing a budget and, just simple things like Chris called the other day, I'm not sure if I'm allowed to say it, and he saved some money on our monthly cable bill and just making smart, wise decisions with your money.
Absolutely, because if you don't make that call, they can always say no.
That's right. Yeah.
right?
Yep.
But
yep.
but if you don't make the call, you just keep paying. So so anyway, we're already almost 6 months into the year, and something else I wanted people to know is you can call us, and we will do a mid-course and analysis of where you are, what your withholding is, how you look towards next year, so that you got a handle on this and help you to adjust your withholding, possibly.
Yep. So you're not left holding the bag at the end of the year with a big tax liability, something you weren't planning on doing. I also want to say in that step, I'm in the middle of helping one of Chris's clients right now who owes about $30,000 to the IRS because she underwithheld, and regrettably her husband just passed away and her brother just passed away and her sister just, there's tragedy under tragedy. And so she doesn't make a lot of money. She doesn't own a house. And so an offer and compromise, we're going to finish it this week. It's an opportunity for them to pay pennies on the dollar, what you've heard of in the past. So,
Well, and that's one of the suggestions that we're going to talk about, is that reducing your tax liability, and you can do it legally. And one of the loopholes is the offer and compromise. So if you truly are unable to pay, then there is a way to remedy that tax liability, and that's called an offer and compromise. And that's, Tiffy's kind of our offer and compromise expert.
Yep.
Right?
Yep. I usually get them done in like 2 visits. Her and I got most of it done this week, and then we're going to finish it next week. And her son was kind enough to drive her in because she doesn't drive, and just the loveliest lady. And so just so fortunate, you know?
That's right.
And
All
she-
right. I'm Esther Gilius, the tax lady. 8030930, 8030930, star 930 on the cell phone. You can text us at 716-8030930. And I see we have an old friend on the line. It's Larry. How are you, Larry?
Well, Miss Esther, darling, I want to wish 2 lovely ladies a happy Memorial Day holiday. How are you?
Good.
I'm
How
great.
are
How
you
about you,
doing,
Larry?
Larry?
I'm doing well. Listen, I'll be quick. I've got a couple of concerns. One, I haven't got my federal return yet. I went online, and it said it was mailed on the 26th of April, but I never got it. That's one issue. And I asked that the refunds be directly deposited. I got my state one, but not my federal. That's one. Secondly, Esther, I'm thinking, well, I have a relatively small IRA, traditional IRA, about $50,000. I'm 75 years young. I'm thinking of maybe doing like a partial Roth. I wonder, what do you think about that? And then lastly, what would I need to tell you to get like a midterm analysis?
Okay,
That makes
so
sense.
let me do the last one first. I know you always work with Chris, so
Yes,
give Chris
love
a
him.
call. He'll take a look at where you're sitting right now. I don't
Okay.
mean literally in Georgia, but I mean where you're sitting financially, and he will help you to see how your mid-course is coming. So that's number one. Number
Okay.
two, it looks like maybe the information on your direct deposit was incorrect. And so what happens is they try to deposit that. They try to deposit it. If not, then what happens is it turns into a check. So if you haven't gotten that check, then you want to make sure you call us so we can call the IRS and put a trace on it to be proactive with your refund.
Okay.
Okay. So, and then what was the third one?
And then, well, the Roth. Chris, knowing what you
yeah.
know about Larry, $50,000 converting into a Roth, what do you think?
It all depends on your financial performance for the year to convert
and you don't
it
want
or
to give
not.
too much information
Yeah.
Correct.
over the air. But again,
Right.
if you do that rollover from your traditional to a Roth, and if you're in the 20% bracket, it's going to cost you $10,000 in taxes.
And that's
so
why-
usually, I mean, when you're like you said,
When you do the
75 years
mid-course.
young, you may not have time to recoup the money that you might be saving from doing your RMD. So that's when you're talking to Chris, he'll look at all that.
Unless you care about your heirs and they won't have to pay taxes on it. So there's lots to consider. But I think what Chris is saying, it depends on how the other investments are to see if it's a worthwhile venture for you, you know?
Okay, Lair?
Hey, Doug, listen, you guys close on Monday, I
Yes.
assume, right?
We are.
Yes.
Tuesday.
Tuesday. Listen, love you guys. Bye
All
bye.
right, thank you, Larry.
Bye, Larry.
Happy Memorial Day. All right, I'm Esther Galias, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930. We're taking a short break. We'll be back on the other side with your calls and comments. Hey, I'm Esther Galias, the tax lady from EG Tax, and we're here to help you to create the best 2024 as possible. And part of that challenge is that everything's more expensive, and so we want to help you to get tax-free income and to maximize your whatever financial benefit that we can work on your behalf. By the way, if you are a small business owner, subchapter S corporation, LLC, or partnership, and you had an existing business before 2024, you only have to the end of the year to do a register under beneficial ownership information with the federal government Department of Fraud Protection, and that's called BOI FinCEN. And EG Tax will help you with that if you'd like, but the penalty is $500 per day until it gets to $10,000. So it is very, very, very important that you do this because it can cost you a lot of money.
Get her done.
And if they think that you did it intentionally, it can be 6 months in jail and $200,000 fine. It's really a very important thing. So if you need help with BOI FinCEN, that's on our website too, right? You guys?
It is. And if you just started in 2024, an LLC or a corporation, you only have 90 days from the date of
Inception.
Registering
with the state to get the FinCEN done, because then your $500 a day penalty starts on day 91. So very important you get this done.
Yeah, so BOI FinCEN. Okay, we have a text. Let's go. And again, 8030930, 8030930, star 930 on a cell phone. Text us at 716-8030930, and we got a text.
Hey, Esther, it says, I got a letter from New York State, and they want me to mail in proof of my mortgage interest, my charity, and all my work expenses. I don't know if I have that readily at my fingertips. What should I do? Exhausted, she said.
Okay, well, the first thing you should do is give us a call so we can help you get organized, because this is going to be a through the mail audit, and you want to make sure that you organize it in such a way so it's very clear that the auditor at New York State understands what you're providing for them. Now, every time you take a deduction, a credit, put anything down on the tax return, it's up to you to have to prove it in the event that they ask for proof. So don't get frustrated. Just make sure that you can check with your bank, check your charity. You have a letter from the
church or organization.
The organization that you gave the money to. You want to make sure you prove it all, and we'll help you to get organized. So give EG Tax a call at our corporate office at 632-7886. You can go to our website at egtax.com. But it can be very frustrating.
Yeah, and a lot of those, they also want proof of your withholding. So you just have to mail them in a W-2 or W-2s if you had multiple employers. And
you want to make sure that you do it so it's registered, so that you can prove that you did. You want to make sure that you dot your I's, cross your T's, and you want to make sure that, I always think you should over-prove.
Yeah,
because you don't want them to disallow.
Yep, and then a lot of them will, did you want to say something, Chris? No. Mile logs. So if you're a sales guy and you don't get reimbursed for your mileage, so you could literally, if you know your odometer and whatnot, and if you can back into your sales portfolio, you could make a mile log and back into it. Also, if you're very frustrated, just give us a buzz. And one of my clients just wanted to provide some of the proof because she didn't have all of the proof. And so we found out what the refund would be without some of her job expenses. And that's okay. My point is, mail in what you got, right?
Right, and in an orderly fashion.
Yeah, don't ignore, any letter you get from the IRS or New York State, don't ignore. I know I just had a client, and he got a letter for 2023 from the IRS, and they're like, oh, we think your estimates are wrong. You owe us all this money. And I'm looking back at the 2020, his returns, and we what it was we applied a refund from 2022 to 2023. But guess what letter he got last year? An
adjustment letter.
No, an identity letter.
Oh, and he didn't prove his identity?
He ignored it. So they never finished processing his return. So to them, it looks like he still owes all that money that was supposed to be kept from his refund. So he's got to do his identity, and then they'll release it, and the bill will go away. But don't ignore any letter, because even if you think you disagree, they're going to say, well, you ignored us. We're right. You're wrong.
And that's what it's a lot like playing tennis. They lob the ball to you, you lob the ball back to them. They lob the ball back to you, and that's why you want to make sure that you have everything put together the best way possible. So if you're getting letters, please just give us a call. We want to help you, right?
Definitely.
And to look at the letters, what do we charge?
Nothing.
Nothing. I mean, you can't beat the price. All right. There are ways, and if you're struggling financially, and who isn't anymore, there are things that you can do to reduce your tax liability, and one of them is contributing to your pension. And so you say to yourself, how can I contribute to my pension? I'm having trouble paying my bills. But I'll give you an example. If you have an employer match, and you put in $10,000 in your pension, and the employer does a 3% match on your wages, let's say it's $3,000, you're going to save taxes of 18%, 12% federal, 6% New York State, maybe it'd even be higher than that. So you'd end up with a tax savings of $1,800, plus you get the $3,000 employer match, so that's like $4,800 free money. Because you're going to reduce your tax liability, and the employer contributes. So that's something that, even though you're thinking I can't afford it, really take a look at these other things that we're talking about on today's broadcast, and see if there's not a way to reduce your liability and reduce your expenses and increase your income, so that you can continue to contribute to your pension plan. It's so important.
Yeah, it absolutely is. There's also a retirement credit on your tax return in 8880. And so that's, if you're not a huge wage earner, you might be entitled to that credit for putting money into your retirement plan. And so it's a win-win, and really often you don't need the money, and you don't miss the money is what I wanted to say.
So where can you get untaxed money? The first thing I said was from your pension plan. Now, you can't get it if you don't have a pension plan, because you can actually borrow the money and pay yourself back interest over a 5-year period, and that borrowed money is tax-free.
Correct.
On your pension.
Yep.
Mm-hmm. So if you're not in the game, you can't take advantage of this.
Yeah.
So borrowing money against your pension plan, not taking it out, it's got to be a loan.
Yeah.
Because if you do a distribution and you're under the age of 59 and a half, it's going to cost you a penalty plus income tax. But if you borrow against it, then you pay yourself back with interest over a 5-year period, and it costs you 0 taxes.
Yeah. For instance, one of my clients, he owed quite a bit of money to the IRS, and unfortunately, he wasn't a candidate for the offer and compromise. But I said, why don't you borrow from your 401k, and then you're paying yourself back, and so it's a really win-win situation. And people are often like, oh, but I could do a payment plan at the IRS. Payment plans at the IRS are really expensive, because the penalties for failure to timely file, failure to the penalties are just going to gobble things up. You agree?
So the bottom line is you don't want the liability.
Correct.
Right? I mean, if you can pay it off, you want to pay it off. What happens is sometimes, because we don't know what to do, we do nothing.
Right.
And it's like a deer caught in the headlights. You just you sit there and you just don't do anything, which is the worst thing that you can do. Mm-hmm. Okay? Another thing, home equity loans. Again, there's something here that you should pay attention to. Borrowed money's not taxable. So
Right.
if you have credit card debt of 25%, but you could get a 7% home equity loan think of the money that you're saving in interest.
Right. Yeah.
And a lot of people will say, I just don't want to go into debt. You are in debt.
Yeah.
And you're in the worst kind of debt, in credit card debt.
And this sort of burnt me up the other day. I was paying one of my credit card bills, and they're now charging me $2 a month for a paper statement. And I mean, it'll add up, and it just burns me inside because you're already paying interest, you're already paying fees. And so I called the customer service, and I go, when I get the paper statement, it sort of serves as a reminder. Well, just put a note on the calendar. And I said, I'm very busy. But so it just is, the ball is starting to roll. Everything's going to move to electronic and no paper. And so you can see what the writing on the wall is. So
Absolutely.
Yeah.
I'm Esther Gilius, the tax lady, 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930. We're talking about how to come up with extra money without having to pay taxes, which is so important. The next thing is a Roth withdrawal.
Yep.
So if you're somebody that has put money into a Roth,
And you got
you
to
can take it out.
Yep, you got to be over 59 and a half, and it's got to be in there at least 5 years to be totally tax-free. Otherwise, I mean, but then the IRS does allow you to
I was
pick
just going
and
to say,
choose.
because I know you can take it out without the penalty. But the thing is, so if you have put money into a Roth and you need not taxed income, you can take money out of your Roth. So that's another thing. So I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930. We're going to take a short break for the news, and we'll be back on the other side with your comments, questions, and suggestions. Hey, to us, you are family. I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930, and we're kind of trying to help you to come up with non-taxed income. Another place that you can get it, and I know we have a bunch of texts, is from savings accounts. And a lot of times people just don't want to raid their savings account because that's their nest egg. But when you're paying 25% on a credit card and you're getting 2% at the bank, think about that, because you want to make sure that money that you were paying on those credit cards, you replenish your savings account. And so money out of a savings account is tax-free. Now, obviously, the income that a savings account you'd have to put on your tax return, but actually withdrawing the money from your checking account or from your savings account costs you nothing. So, okay, let's go to some of our text, Steph.
just a little bit of time and energy. It says, team, my dad recently passed away, and my mom did years ago, and my mom and dad didn't put a beneficiary. What should I do now? On their IRAs, I guess.
Oh, but and all what's he talking about? I mean, I don't know. The person should text us back and let us know what you're talking about. Are you talking about the beneficiary? Did you inherit a house? Did you inherit anything? Because just like Dennis Kitchen says in the commercial, if they didn't leave a will, then the state of New York is going to provide it for you. So everybody listening, wills are extremely important, and the beneficiary is really important because it directs who's going to get what outside of the will, right?
Yeah. Yeah. Also, a good resource is Jeff Katz. What were you going to say, Chris?
I was going to say, I mean, that your beneficiaries are a huge thing, because for the 1041, your estate tax saying, hey, I'm dead and I'm still making money to the federal government, the highest tax bracket at 37% starts at $14,000
On a fiduciary
on a
return.
fiduciary return. Where an individual, a single person, I believe that's like $450,000.
Right.
So big difference there. Whether you put Bob Smith as your beneficiary, who makes $100,000, he's going to pay 22% on that, compared to 37% to the federal through the fiduciary return.
So here's the bottom line. Here, if you're alive and you have assets, like for instance, savings accounts, IRAs, annuities, and it will let you list a beneficiary. Make sure you write it for Tuesday. Say, Tuesday, I'm going to contact these organizations and I'm going to list a beneficiary. Otherwise, that's money that your estate won't be able to give to your heirs because they got to pay the income taxes. I mean, so just little things like that. Tweaking your situation is really what all of you just might have to do. And in the bottom line, it enhances your own financial situation.
Exactly.
It sure does.
All right. What do we got next?
That it says that's illegal to charge statement fees. They write it off. I think somebody's responding to the fact that I said that somebody's charging a $2 a month statement fee for a paper statement. And
So what does that mean? They write it off.
I don't know. That's what the texter said.
That
so.
means the credit card company.
You know, and here's the thing about doing something illegal. Unless somebody challenges it,
Right.
and it's $2, it's so small, nobody's probably going to challenge it. So,
Well, all those $2 add up.
I know that's true. All those $2
Yeah.
do add up. But if nobody's going to challenge it in court, then you can be doing something illegal and nobody's going to stop you.
Yep. That's sort of.
And then we got another one there.
We do. I bought a house with my boyfriend this year, and I was wondering who should take the write-offs. We both make about the same amount of money.
Well, what you ought to do, remember, if you're not married, so you're not filing a joint return, if one of you itemizes, the other one would get the standard deduction. And so I would suggest you take a look at which of the two you make more money. If you're in the same tax bracket, maybe this year your boyfriend wants to itemize and next year you want to itemize, but you get the benefit of both worlds. Whereas if you were married filing a separate return, that wouldn't be the case, right?
Yeah, and then also if somebody has more charity than the other one, or if somebody has more work expenses than the other girlfriend, boyfriend, you would also want to enter that into the equation as well.
But you don't want to split the deduction, because your standard deduction as single taxpayers is almost $13,000. And so if you split that deduction and you don't get over the standard deduction, means that nobody's going to benefit. So you want to make sure that you allocate it to one or the other, but make sure you guys have a joint checking account, because it's got to be your debt paid with your money. So you want to make sure that you're paying it. So if one of you is paying the bills and has your own checking account, that would preclude the other from taking it. So you want to make sure you can do that too.
Yep, I agree. I
All
agree.
right. I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 and a cell phone. Text us at 716-8030930. Another place to get free tax-free money is garage sales. When you sell your stuff at a garage sale, generally speaking, you're losing money. You buy a purse for $100, you sell it for $25 at the garage sale. That's tax-free money because it's selling personal assets at a loss.
That's right.
So again, just another place to pick up money. I was just at a client's house this morning, and their house looked like a museum.
Ah.
They had so much. They are collectors, and they collect and collect and collect. But the truth is, if they had a big garage sale, they probably would make hundreds of thousands of dollars, because when you're selling personal assets at a loss, that's that's going to be tax free.
Or they could do an estate sale or something,
Right.
Yeah.
Estate sales are a wonderful way to sell stuff, and you're selling it at a loss, so it's tax free. And I know one of our sponsors is somebody that does that.
Yep, that's right. That's
Sandra Ziemer.
Yep. So just give her
So
a call.
again, we're talking about creative ways to get money without it costing you taxes.
Yeah, and that's a nice plug. Is pretty soon in the next week or so, Jesse from Cross State Funding is going to come on and talk about refinancing your house. That's a good way to pull money out and pay those higher interest rate debts and
Right, and they
mortgages.
should redo their commercial, because it's not the lowest rates ever now.
Right, and we're going to have Kathy Anderson from Hunt to come on and talk about the new real estate laws for.
Yeah, because that's a big thing.
That's
That's a
starting
big thing.
June 1st, the new law is going to effect for that. So
Right, and okay, so another place you can get money from, many people are at age 62 are still waiting to get money out of their Social Security. And many times it's very beneficial for you to start withdrawing from Social Security. And if your income's low enough, you'll get it tax-free.
right?
And it's tax-free on New York State as well. So that's another place to get money, especially in these high inflationary times.
Yep, that's
Yes.
right. That's
All right,
right.
let's go to the next text.
Yeah, there's a few texts. The first one I'm going to do is, hi, we recently had a new furnace, AC, and heat pump installed at our house. Cost was about $12,000. Company said we could claim $2,500 IRS tax credit on our 24 taxes. Is that true? Is there anything similar on New York State? Thank you very much.
You guys want to handle that?
Sure. Yep. Well, definitely your furnace and your AC does count. That will be about $1,200, and then you do get the credit for the heat pump on the federal. So, yep, that you do qualify. And unfortunately, New York
I mean,
State,
we're assuming that it's the highest SEER.
correct.
That's right.
You know,
The
I mean,
high energy
it's,
efficient.
The company that put it in, if they said that it qualifies, my assumption is that they know that it's going to qualify for the credits. So that's very important when when you're looking at upgrading your energy efficiency and you want to make sure you qualify for these credits, make sure that they qualify. So you can call us, and we have a whole list of what does qualify before it's tax time and you find out it doesn't qualify.
Right.
Yep. Good point. So the next question is, we're on to these statement fees. No, you were right where you were. Statement fee. One of my 2 HSA accounts that my husband and I own, only one charges statement fee, the other doesn't. The one that charges has over $8K in it. The one that doesn't charge has literally only has $18,000 in it.
$18.
$18. Okay, I didn't see the dot. That's my medical expense fund. It was not disclosed or charged before we opened it. And HSA recent FDI insured. How do they get away with that? Again, not disclosed when open. People need to be aware. This is an IRS program through a high deductible insurance from my employer. I love your thoughts on that. How can we fight this? I loved your statement fee comment. Not everyone has access to a computer or a printer. I know, it burned me up.
I mean, there's so many things that are unjust in this world.
I think
and it seems to be happening more and more all the time.
I think you have to do a class action lawsuit. Am I right?
But where you have to get a class of people that are going to join, and then that costs money.
Right, but
going to the Attorney General is a really good thing to do in the state of New York.
Right. Going to the Attorney General.
Because then they might take up the case for you.
I know.
So that's always a good thing.
One
to do.
thing is, feet I'm taking action, and I'm getting rid of that credit card. And I also had one of those credit cards, and Chris did at the same place. Mine had a zero balance, so his had money on it. So I have subsequently canceled both of those credit cards, and I'm going to let the person know at customer service. But
there you go.
So
that's good. That's good.
But I like the Attorney General idea because that person needs their HSA.
Right. I mean, that's what that's their job. And remember, there's district attorneys locally.
Right.
And then there's the big Attorney General in New York State. And you can call the office.
I really like that idea.
All right, before we go to break, the other thing that you can do to get free money, and this is another suggestion, is especially if you're a senior and you really are feeling the pinch, you have no other way to make income, is a reverse mortgage. You can start if your home is paid for, even if you have a mortgage on it and you have equity, you can take money out of that equity tax-free to assist you to live. And even if it goes upside down so that you took out more than the value of the house, this is a HUD program, and they won't kick you out of the house, and they will pay off your first mortgage, and it is an absolute blessing to many seniors.
Yeah.
Now, it isn't right for everybody, but it really can be a blessing to a senior who wouldn't have any other way to be able to stay in their home.
Yeah, and I just want to say a few other things before we close this topic. I did talk to the manager at this place, and I told them about the computer and the whatnot, and they did not care. And that texter then thought about contacting New York State Banking Department, and so
There you go. There
Yeah.
you go. I mean, there's a lot of departments in New York State who can be very punitive if you're doing the wrong thing, and the only way they know is if you let them know.
yeah. So let us know
Okay,
what
let's
happens.
take a short break. We'll be back on the other side. Hey, to us, you are family. I'm Esther Golias, the tax lady, in studio with Christopher Fabian, Tiffany Fabian, and we're trying to help you to get a handle on the inflation, which is so hard for everybody, people on fixed incomes, families, young families, the cost of daycare and everything. So we're coming up with some ways that you can come up with some income without paying income taxes. The other thing is you want to take a look, and we were doing these mid-course corrections. Can you change your withholding? Because when you have too large a withholding, you're sending your spendable income off to the federal government and the state of New York, and you have to wait till next tax season to get it back. And if they come up with an identity thing, it may take another 6 months after that. So you want to make sure that you take a look at your withholding to make sure that you aren't over withholding so that you have that money to live off of. Right, Chris? Tiff?
Yep, absolutely. Yep. So then you know if you've got too much, and maybe some of that money you're putting into withholdings you could put into your 401k, or just give us a buzz and we'll look at the whole
Right.
package.
So that's another way to get tax-free income, and you don't give them the opportunity to use it for the full year. They give you no interest on this.
Right. And be careful, because how many times have we seen people, I'm getting a big check, I'm going to change my withholding, and then they never change it back, and then they end up owing the IRS a fortune, and then they just created another balance due for them where they're going to keep getting hit with penalties and interest. So you got to walk that line carefully.
I mean, and here, if you're listening to what we're saying, each one of these things, if you don't do it or you do it incorrectly, you can shoot yourself in the foot.
That's right.
And so that's part of what we want to do, because we do think of you as family. We want you to be able to be successful.
Yes, that's right.
In your finances. But and so I guess the next thing I would say is that looking at your finances can be just horrible. I mean, because it's like saying, I would like to go get a cancer diagnosis. I mean, you just don't, it's something you don't want to do many times, but you really can't make a decision until you really take a look at your finances realistically.
That's right. Yeah, it's we shut the door really quickly on about reverse mortgages. The reverse mortgage has helped so many people, and it was put in place by President Reagan to help seniors stay in their home. And so it's really a good option when you're short on cash, and it's something viable and you should look at.
Right. And I have to tell you, they weren't doing them then during COVID. They kind of quit because the interest rates were so low. Well, now interest rates are higher, so the banks are making more money on it. But again, it's all tax-free income. All right, why don't we go? We have another text here.
Yep. It says, Esther and Chris, I received a cancellation of debt form for around $12,000 in 2023. I didn't put it on my return because it was from years ago for a car loan, and I don't think it was a cancellation. What should I do?
Well, if you got the form, the cancellation of debt form, it went to the IRS. And if you haven't put it on your tax return, they're probably in the market of sending you a bill right now. But not all cancellation of debt is taxable, right, guys?
Right. Well, you have to see, first of all, when the debt was. And for this, if they believe it was a car loan,
Years ago.
how many years ago was it? And you have to go back to that time frame and see if you were solvent or insolvent, meaning were you in the black or in the red? Because if you were in the red, that would mean then that cancellation of debt wouldn't be taxable, and you do Form 982, and you don't pay tax on that money.
Right. Now, when Chris says in the black or in the red, what he's saying is all of your assets. You have to take a look at all of your assets at the time of the debt forgiveness, and you come up with a figure. Then you look at all of your liabilities. And if you have more liabilities than you have assets, then you are insolvent and you would have qualified for a bankruptcy possibly. If that's the case, then like Chris said, you do that form and it makes the formerly taxable forgiveness of debt non-taxable.
Yes. So,
Okay?
but definitely I would call them and see what this is so you know what it's about. So
Right. And, this kind of goes back to like the guy with the estimated payments. I mean, when you get some of these things, don't ignore them. If you don't understand it, and they can issue a correction. Some of these 1099s that they issue, they do them incorrectly.
Yeah.
And you want to make sure that you speak up for yourself.
Yeah, it requires action, and so you just can't sit on it. You really have to. And sometimes, people are so busy. Inaction is what happens. And so, if you need us to help you, we're your conduit for that.
Right. I mean, it's a lot like being an ostrich. You don't like it. You don't want to know about it. You don't want to hear about it. So you push it off and you push it off and you push it off. And then days go into weeks, weeks go into months, months go into years. And you haven't taken control of your finances. I know on our website we have that, what is it called? Letter of intention? Or
letter of intent. Yep.
Yeah. And you can download that, and it really kind of forces you to take a look at where your assets are and what your passcodes are. So in the event that something happens to you, I mean, the only way we all get out of here is not a very pleasant idea, but you want to make sure that your heirs know what you have, where it is, and and set it up so that you aren't shooting yourself in the foot.
And I know one of my clients a couple of years ago, you see those commercials on TV, credit card debt. You have lots and lots of credit card debt. Let us help you solve this problem of credit card debt. And part of their way of solving it is they don't have you pay it for several months, and don't pay it. And then they negotiate with the credit card companies and say, okay, you owe $5,000. We're going to reduce it to $900. Well, then what happens, this person didn't know, is then at the end of the year, she gets all these cancellation of debt forms. And so, talking about this seminar we're having, I mean, it will be good. We'll have a lawyer there and different ways of negotiating bankruptcies and
Right. And
maybe
so
not bankruptcies.
if this sounds something you'd like to come to, our seminar on getting a handle on inflation and making some smart business decisions that don't cost you taxes, you can go to our website and put your 2 cents in, and we'd really appreciate it, because we normally do the Ready, Set, Retire seminar, which we may still do.
We still have- the
But
financial
with
guys are counting on
inflation,
us.
but with inflation being so horrible, we just thought this might be something that people would like to do so that we can help you with your finances.
Right. And, this, with what Tiff was saying with her client, also, you may not have bad credit. You just may be in debt, but your credit may not be that bad. And by doing these cancellations of debt, it just destroys your credit.
Right. And so many times, and Dennis Kitchen is one of our advertisers, and he talks about bankruptcy. Sometimes the best thing you can do is to do a bankruptcy because you already have bad credit. And one good thing about bankruptcy is once you've gotten rid of the debt, you can always reassign if this morally bothers you. But it's a lot like dragging along a dead body day after day, year after year. Sometimes the bankruptcy is the best thing that you can do so that you can reestablish your credit and then pay off and have the debt paid off. Right?
Correct.
Right.
All right. So, okay, but here's the bottom line. If you found something that strikes your chord and you need help, EG Tax will help you. You can use us as a resource. You can go to our website at egtax.com. But the important thing is that you do something. Because that old adage, to keep doing the same thing over and over and over again and thinking you're going to get a different result, or hoping that the tooth fairy is going to drop money in your mailbox, that's not realistic. And so if you need help, we absolutely will help you to prepare a budget at no charge.
Yep. Yep. And, sometimes getting a second job might be an option. And so many times I have clients are like, oh, no, I'm not going to get a second job because then I got to go pay more taxes. But I'm going to do one of my favorite sayings is I'll give you 50 and you give me 250. I'll do that all day long. And so,
Right, because all you can do is pay the tax bracket that you're in. So if you're in the 20% tax bracket and you make an extra 1,000, they get 200, you get 800.
Right.
Right?
Yep.
So that's another thing that people do, stinking thinking. You just want to make sure that you're thinking the right way. So give EG Tax a call. Our corporate headquarters, 632-7886. And I'm Esther Gilius, the tax lady from EG Tax. Go to our website. We have all kinds of things to help you. And if you haven't prepared your tax return yet, we do that every day too. So until next week, I'm Esther Gilius with Christopher Fabian, Tiffany Fabian. And thanks for listening. Have a wonderful Memorial Day, and thanks for your service.
The previous program was paid for by EG Tax.